Hello everyone, my name is Hitesh and I welcome you to this grand event of Trade Brains called as Elevate 21. This is the flagship event of Trade Brains. Today is the third day of the event and this event will go till 31st of this month. I hope you're having fun. We have had two quizzes conducted in the previous 2 days and we have finished five keynote sessions. In the first keynote sessions, you got to learn a lot from Prasad Linby, and this session is actually even more interesting one because we have got someone from the finance industry or the stock market industry who is actually very well-known name. He's famously known for his best-selling book called as How to Avoid Losses and Earn Consistently in Stock Market. It is one of his highest rated book in the investing domain in India. He is the founder of Paul Asset Consultant Private Limited. I'll tell you a bit about his introduction to the market. He was introduced to stock market at a young age of 18, and the passion for investing or trading has grown since then, and it is actually growing day by day basis. He has also got his YouTube channel which is focused on financial literacy. Today, I present to you Prasenjit Paul. He is going to be our next keynote speaker. He is talking about a bulletproof checklist of how to avoid losses in the stock market. He will talk about importance of avoiding losses. He will also talk about what is the difference between investing mentality or trading mentality. He will talk about the concept of futures and options and who should it be used by and who should it not be used by. And he'll also talk about a simple strategy through which you can beat the returns which you get out of fixed deposit. I welcome you again, Prasenjit Paul, and I leave the podium open to you. Welcome to Elevate 20 and Prasenjit.
Thank you, Hitesh. Welcome, everyone. I hope all of you are safe in these uncertain times. The first, I think I want to share you, give me 30 minutes of your time. Within the next 30 minutes, I am sure you can know the way how to avoid loss in the stock market, and surely you can know a very simple method via which you can earn consistently in the market. That's my guarantee. Just give me next 30 minutes of your time and listen to the entire presentation carefully. So let's start. I think enough introduction is already there, so I'm not willing to introduce myself again. But I think most of you know me. I have authored the best-selling book, How to Avoid Loss and Earn Consistently in the Stock Market, and I'm investing in the stock market since 2010 and achieve financial freedom from this field. Anyways, enough of this introduction and all. So now let's begin this presentation. Checklist to avoid loss in the stock market, a bulletproof checklist that can be helpful for anyone, be it beginner or advanced or experienced, whoever you are. I am sure that you will find it helpful. So let's start. First, I want to share you the importance of avoiding loss. Many of you might ask, I want to learn how to make money. What's the importance at all that I should learn? Okay, that avoiding loss is also important. Well, just a very simple thing. See, if you are an investor, whether an experienced beginner or whatever, and suppose you have planning to invest starting with the 10,000 amount. Okay. Now, most of the small investors that I notice, they say, I'm a small investor, I have some small capital, so I need to grow money faster. From 10,000, I want to make it 1 lakh, then 1 lakh to 10 lakhs, and so on. But just think about it. The faster you want to make money, the higher is the risk. Very obvious thing. Now, what will happen if your 10,000 amount turns 5,000, or if 1 lakh turns to 50,000? What will happen? If your 10,000 initial investment amount becomes 5,000, then there is 50% loss. Now, remember, to recover this 50% loss, you need 100% return. Can you get it? I think this very simple thing. Once 10,000 rupees becomes 5,000, just a 50% loss, then from 5,000 to 10,000 again, you need 100% return, which is very difficult. Similarly, even if your capital comes from, say, for example, 1 lakh to 70 lakhs, or just a 30% loss, from 100 to 70, then to recover that 70 to 100 again, you need 42% profit. This is where there's the importance of avoiding loss. Always remember, if you lose even 10% of your capital, or if you lose 10, 30, 40, 50, whatever you say, If you lose your capital, then you need a lot more profit just to level up your initial investment amount. This is why I always suggest, like, to become a successful investor, you first need to master the art of avoiding loss. Maximum investors skip this. Maximum investors jump into how to earn money quickly. They do course and a lot of things and all, how to how to make money double, triple, without even learning the technique to avoid loss first. So I'm repeating, to become a successful investor, you first need to master the art of avoiding loss. Once you can master the art of avoiding loss, then it will become easy to make money. So don't skip that step. So let's now move forward to the checklist. Then I'll suggest some multiple checklists. Then I'll share you an instrument. Then I'll share some few 3-4 screening parameters through which you can choose a stock and you can avoid losing money. So what are the checklist? Okay, so first I want to ask you a question, like, how many times it happened, like, after some consecutive profits you started feeling like, "Are apuni bhagavan hai." Matlab, it also happened with me while I was a starter. Like, if I make twice or thrice or consecutive profits over a period of 1, 2, 3, 4 months, then overconfidence, a certain kind of confidence grows. It would have been better, like, due to this COVID, as we know, this is the virtual session, but it would have been better if I can talk to you face to face, because I'm sure many of you, like it happened with most of you, after making some profits, after making consecutive 3, 4, 5 times profit, you started thinking, "Are, hum to ab stock market ka raja hai. Ye apni bhagwan hai." That's some famous dialogue of Nawazuddin Siddiqui. Hope you remember. So this is a very common thing. This is a part of human psychology. Like, once you win, even if you are talking about cricket, football, or whatever, like, if a particular team keeps winning, then automatically overconfidence grows. Automatically. Now there's a very thin line between confidence and overconfidence. Obviously, to become successful in any field, confidence is very important, but there's a very thin line between the overconfidence and confidence. And in the stock market, what happens if you make money in few instances, once, twice, thrice, then or if you find some multi-bagger, say for example, you invested in a stock 2 years, 1 year back, and within 1 year you are getting twice or thrice kind of return, then you certainly will feel like, "अरे मैं तो खुद भगवान हूँ, मुझे सब कुछ पता है मार्केट के बारे में, अब तो मैं डबल इन्वेस्ट करूंगा, डबल का इन्वेस्टमेंट मेरा और डबल हो जाएगा." So if you are in this certain, in such kind of feelings, always remember one thing, that overconfidence kills. And with this overconfidence, what maximum people do, they even sometimes borrow money, they take others fund to invest in the market. So the first checklist, always remember, overconfidence kills. Never ever trade using borrowed fund or someone else fund. Lot of time happens, you might make double return or triple return in 1 year or 6 months. Then you started thinking, "Okay, I already made this kind of money. Let's take a loan of 7% or 8% interest. Then I'll double the money and I'll return back to that person. Or let's take some loan from my friend or someone else, and then I can again double my money and return it." I'm telling you from my last 10 years of experience that this is a very dangerous practice. Trading with borrowed money, trading with others' fund is a very dangerous practice. It can kill you. I'm sure that this is a danger and it can kill you. So please remember the first thing, overconfidence kills in the stock market. Never ever trade using borrowed fund or using others' fund. The next thing that I think this is also a very common thing that I noticed among investors or even traders. Suppose you attempted for an intraday trading or maybe a short-term trading. Then you entered in a position, and then after 1 month, 2 months, or maybe on by the end of the day, that your position is in loss. Or say for example, today you invested in a particular stock thinking that within 1 week you can exit at profit. Then what happens? Unfortunately, the stock started moving on the reverse direction and you are in a losing position. Then many times what investors do, they carry forward that position. So once they entered as an intraday trade, then by the end of the day, as the stock is losing money, as that position is losing, then they turn a long-term investor. They keep holding the stock, thinking, well, whenever it will become to my cost price, I'll then exit. See, this strategy sometimes works. I'm not saying that this can never work. If you are lucky, what will happen? Say, for example, today our stock is 100 rupees. You are planning to exit within 1 week or within 2 days or within the same day if the stock price move from 100 to 110. And then unfortunately, by the end of the day, the stock price dropped from 100 rupees to 90 rupees. Maybe if you keep the stop loss, that stop loss might hit. And then what happens? You are thinking, no, it is now 90. So let's keep holding the position. I'll hold it for a few more days and then I'll exit once it will again reach 100 days at the rupees of 100. So I'm telling you, if you are lucky, then this strategy sometimes works. If you are lucky, sometimes you can exit at 100 rupees if your short-term trading positions turns into a long time. But most of the time, what happens? The loss gets wider. As I'm talking about, if you're lucky, means if the overall market is in the bullish phase, like for the last 6 months or over the last 1 year, that is the case. So if you are if you are faced with this situation over the last 6 months, then I am sure it might happen that okay, the position was losing money temporarily and then again it regained. But remember, just because of your luck that happened, but most of the time what happens, again I'm telling this from my long experience, as I experienced multiple traders, multiple investors in this time period, so I know it. Most of the times what happens, the loss is getting wider. So this is why never ever trade like an investor and don't invest like a trader. Before investing in any stock, be specific first, like what you are doing. Are you going for short term trade or are you going for long term investment, or exactly what you are doing? Once you made your mind, okay, say for example, I'm going for intraday trade, then just because of the loss, don't change your intraday position to a long term investment. Similarly, say for example, you are investing in a particular stock for the next 1 year. Within 1 week or 2 weeks, you might get a good profit. Then just because within 1 week the stock price moved up doesn't necessarily mean that you should exit the position, because once the stock price keeps started moving up, it can move a lot higher. So before investing in any stock or before entering in any trade, be specific first. And after being specific, don't trade like an investor and don't invest like a trader. The next thing is, again, that's one question for you. Like, did you lose money on intraday or in future and option trading? See, if your answer is yes, then you are not alone. There are many people, many more people lose money in all sort of intraday, futures, options, and all. I'm not telling that nobody can make money. Yes, many people make money as well in intraday, futures, and all, but they are experienced. Without in-depth knowledge, you can't make money consistently from intraday or future and options. I'm telling you that many people will tempt you. Many people will say, okay, join to my course. They will offer some expensive courses. Join to my course. I'll teach you some great strategy to make consistent money from options. I'll teach you some great these things, this and there's this. They can also provide some screenshots. One can easily provide any kind of fake screenshots. Again, I'm not telling that all are offering fake screenshots, but yes, be always remember that unless and until you have a long experience, you have in-depth knowledge, maximum retail investors lose money from intraday, future and options and all. So be careful from it. Ask yourself whether you are experienced enough or not, whether you have in-depth knowledge or not. If not, then stay away from this. Okay, so now after this three checklist, now if you are curious to know, like, do you know that the safest way, like if you are looking for, okay, so these are the things that I need to keep in mind, that's fine. Now, if you ask me, or if I can say you, like there is a safest way in which you can earn double of a fixed deposit without any knowledge, with no active tracking, without paying anyone any fees. This is possible. I'm repeating. See, this is very significant. For example, there are many investors or who is involved in some other profession and business, they don't have enough time to learn, or they don't have enough money to join for any course or to learn or whatever. If either you don't have enough time or you don't have enough money, but still want to earn more than the fixed deposit, then I have a very simple solution for you. And always remember, the solution that I'm going to share you, which requires no knowledge, no such active research. You don't have to pay fees to anyone, not even me. So what is these things? This is a very simple, and this is very useful for beginners, because I had noticed not only beginners, like if you are struggling to make money from the stock market, like say for example, you are in the stock market for the last 2-3 years, but still struggling to make enough money from the stock market, then this is option is for you. Now remember, over the last 1 year, the stock market performance is great. So even if you are losing money despite presenting in the stock market for the last 1 year, then this is a high time you should follow this. Because in the last 1 year, if I'm talking about myself or whoever I see, that's the process of making money from the stock market becomes very easy, because the market keeps rising over the last 10-12 months. But always remember, the same thing won't last longer. It's not possible like the same kind of thing, that the same kind of market performance, overall good nifty return will continue. So this is why this is for you. And if you are someone who is still struggling to make money even in the last 1 year, then this is a must for you. What is this? That's simply Nifty Bees or Nifty Index Fund. See, just by investing any amount, you can start with 500, 1000, 50,000, 1 lakh, whatever, doesn't matter. If you invest any particular amount every month, then over a long-term period, over 2-3 years, you will certainly earn 12 to 15% annualized kind of return. I'm not saying this, history is saying this. And why that kind of return is possible, that I'll share you on the next slide. But you need to remember one thing, that you are getting this best possible solution at no research, no effort, no knowledge, not even spending any time in the market, or most importantly, not paying any fees to anyone. You are not paying a single penny to any advisory company. You are not paying any single fees to do any course. You are not paying any single rupees fees to go opt for some advanced screener or whatever, without paying any fees, without any research, without any knowledge, without spending any time. If someone can earn 12 to 15% kind of annualized return, that's a great return. And 12, 15 to 15%, this is almost, I can say, this is a double of fixed deposit, which is great. The only condition is you have to keep investing month after month. I'll tell this why. Now, if you are not satisfied with this 15-20%, 12 to 15% kind of return, then obviously one can earn 20%, 30%, or even more, 50%, 60%. Every return is possible from the stock market. In fact, I am, since the last 10-11 years, I am personally earning close to 27-30% kind of CAGR return. On the after few slides, I'll show you, like even I have earned 15 times return from few stocks. But for that, you need a lot of efforts. Making money from the stock market is not easy. If you are looking for more than 20%, 30%, 40, 50, 60, or 100, whatever you want, it is possible. I'm not saying not possible, but that's not easy. That requires a lot of effort. But the easiest way is, without any effort, is this Nifty Bees, in which you can earn almost double of the fixed deposit. Now, why? The most important thing that you need to remember, just because I am saying don't believe me, just my word, you need to understand why. I don't know how many of you know about this Nifty Bees or Nifty Index, but in this presentation, I'll cover shortly. See, if while you are investing in Nifty Bees or Nifty 50 ETF, you are actually investing in India's top 50 companies. If any particular company performs bad, then automatically it gets out and the new company enters automatically. So the simple thing is, it means like top 50 companies in India, you are indirectly investing at a single Nifty like 50 ETF. You can start investing just by 150, 200, or any amount as per your wish. Now, what is the possibility of negative return? Why, as I'm saying, that you can earn like 12 to 15% annualized return? See, if after investing every month in Nifty 50 ETF for the 4 or 5 years, if you still if the still negative return is showing, then the entire country, the entire India will be in trouble. Because once you are investing in the India's top 50 companies, it means you are investing in India. So Indian growth story is completely directed. I mean, it's completely correlated with your return. If after 5 years this overall Nifty generate negative return, then what will happen? That is possible only if India enters a deep recession. And on that case, maybe most of the employees will also, there will be salary reduction. There can be a lot of things. So chances of such situation is less. And if such thing happens, India must have to undergo a very deep recession over the next 4 or 5 years. But otherwise, if you keep investing every month, remember, I'm stressing this point, like you need to invest any particular amount every month. It's not like that today you are investing and then forget. Why? Because if you invest in every month, automatically your cost will be averaged. You can get an average purchase price for the Nifty 50 ETF or for this Nifty Biz. Now, obviously, as we have a limited time period to cover this presentation. So you can check out my free YouTube videos. Like I have an English version video, Hindi version video, Bengali version video covering what is this Nifty Biz, Nifty 50 index, each and everything, how you can buy, why, and all things. So after the presentation, I will share this PDF with the Trade Brain guys. If you require this presentation PDF, you can ask them. They can surely mail you, or if you want, maybe I can share with you in YouTube or whatever you want. So, but if you can check this, I have a complete detailed video on Nifty Biz, which is the safest form of return, which offers the safest return for you. So, one thing I must need to tell you, you must have to remember, I have no commission, no incentive, no direct or indirect fees or any benefits if you invest in Nifty Biz or Nifty 50 ETF. Most of the times, while a person shares a stock tips or whatever, you need to always remember one thing: in this financial market, nobody is doing charity. Whenever any person shares any kind of tips, whatever, there must be some kind of motive. Yeah, sometimes good motive, sometimes whatever be it, but nobody is doing any charity over here. So if you use some common sense, why I am suggesting this, because there are many investors who really can't afford any course, really can't afford or don't have enough time to get knowledge, and they are getting cheated time again and again. So you need to remember one thing, like I have no commission or incentive. If you purchase a Nifty Biz from any brokerage house, anyone, nobody else can receive any commission, any incentive, anything. So you have to remember these things. And obviously, I'll suggest you to, after this presentation, go through my YouTube videos so that you can have a great idea about this Nifty Biz or Nifty 50 ETF. If you already have enough idea, then it's fine. But still, if you visit those YouTube videos, you can learn a lot more things. Now, I'll now share you certain steps like Nifty 50 ETF. That part is completely fine. Apart from investing monthly Nifty Biz, side by side, you should keep learning, because without in-depth knowledge, the chances of losing money from the stock market is maximum. Now, in the next slide, I will share some certain stock specific techniques. But before that, I'm telling you, as I'm telling time again and again, you should learn. Be careful from whom you are learning. Check whether that person himself succeed or not, or just sharing some theoretical GAN or some by producing some fake screenshots and all, because it is very important to check from whom you are learning. And if you can learn from a correct person, then only you can make money, or then only you can succeed, otherwise not. So be very careful on it. I'm now sharing you the stock specific, like what are the very simple technique. The technique is one can screenshot companies using this 3 parameters. If you screen companies using just these 3 parameters, you can't suffer loss over long run. Why? that I'll cover in the next slide. Before that, what are these parameters? Simply visit the screener.in website, search with companies market capitalization more than 2000 crore, then and zero debt to equity ratio, 5 years average return on equity more than 15%. And so these three you can put on the screener. The next parameter, 5 years total CFO cash flow from operation divided by 5 years total profit after tax more than 1. That particular thing you can't screen, but that you need to check manually. If I quickly show you the screener, so I'm exiting saying, so here is the screener. So I have just, if I click on the run this query, so I hope you can see this my query. Debt to equity ratio equal to 0, then average return on equity for 5 years more than 15%, market capitalization more than 2000. And after that you need to check like whether the companies, there are how many, 52 companies came. So from this list you can check like whether these companies are like the CFO cash flow from operation divided by total profit, whether it is more than 1 or not. If it is more than 1, then that's the safe. If not, then I'll also share you like basically like in my website prasenjitpaul.com, I have a detailed course where you can get within a simple Excel sheet, you can get all these details. As here I have very short time, so I need to cover quickly. So as on now, you can manually check this, but if you already enrolled, those who already enrolled my course, they can also check this automatically using within just a few minutes. Now, the most important thing, why I am telling, like if a company, if any particular stock satisfy these three criteria, what is actually happening? These three criteria is actually covering a lot of things, around 35 parameters. See, if a company has zero debt, then it means there's no promoter pledging, there is no chances of bankruptcy, and even in the worst situation, the company can't default. You know that COVID happened, and while the COVID happened, if you own a business, you can understand it better. Say, for example, you are a business owner, then all on a sudden something drastic happened, and at the same time, you have no loan. You don't have to pay any kind of EMI. Sorry. So on that case, the chances of survival is very high for you, because if you don't have to pay monthly EMI, if you don't need to service loan, then it is very easy for survival. There is a very common sense. This is why the zero debt companies, if a company has no loan on its books, it simply means there is no promoter pledge, no chances of bankruptcy, and the company can't default on loan. At the same time, the combination of these three, zero debt, cash flow from operation divided by PAT, and return on equity, these three ensures healthy balance sheet, better return ratios, there is real cash flow, and no working capital stress. Third, most importantly, it also means the company is not manipulating its profit. It also proves management efficiency. As I'm talking again that I have very short time, so I'm covering a lot of things within. You can't realize like this. I think these three parameters can work like a magic. Just using these three parameters, you can check corporate governance. You are checking balance sheet, quality balance sheet. You have checking the ability, whether the company is able to survive even in the worst situation. So this works like a magic. If you also can use your common sense, or if you are little bit know about these things, you can also realize how powerful these three things are. And obviously, once you check all the companies and like do screening and all, the more the things will more clear to you. So these three criteria works like a magic. Remember, I am talking about if you want to avoid loss, because like making money, as I mentioned earlier, hope you also know, making money from stock market or from any field, it's not that much easy. Because see, a doctor also spent 5 years in MBBS course, engineer 4 years, and we all are earning money because we spent 18, 19 years from nursery to then college, master degree, bachelor degree, a lot of things. So making money from stock market, high return is not that easy, but avoiding loss is easy. And if you invest in a company who satisfies all these three conditions, and the company like these conditions, and the company is doing reasonably good on quarter basis, then you can avoid loss if you hold the position over a long run. Okay. Now, as I mentioned, like I am talking about avoiding loss, and another important thing, don't believe my words. Actually, to succeed in the stock market, you shouldn't take anyone words and granted. Just because someone is saying that, okay, you don't take it as a granted, check it yourself. Always apply your common sense. Whatever the process I mentioned, first apply it without investing any real money. First do your own homework. Apply this for a few months and then believe. If you want to earn consistently, learn at the easiest possible way some truths that nobody can tell you, that is available in my course. But again, I'm not telling you just go and now join my course. First, use your common sense. Check yourself, like whatever I am telling, whether there are some enough substance on it or not, because in the financial market, in the stock market, never ever take anyone word granted. Always use your common sense. See, yeah, this is another interesting point. Like earlier, I have mentioned, like before opting for any course from anyone or before opting to learn from anyone, always check whether that person succeeded in real world or not. Don't go just because someone is providing some screenshot and not. Okay, now if you are asking about myself, you can simply check the BSc shareholding pattern, which is nobody can alter, like screenshots or like any trading account. So you can check the shareholding pattern of like Chemcrux, Lancer container, where you will find like from Chemcrux Industries, I personally made 1400 plus return. From Lancer container, I have made 400% return for myself. So
Prasenjit,
this
sorry to cut you in between. We're getting a lot of queries from our audience. Can we answer a few questions right now? Actually,
okay. So I think I'll complete within the next 2-3 minutes.
sure, sure,
And then I'll address the questions answer.
sure.
So that's the, yeah, as I'm talking about that we are running short on time. So that's the thing you can check. Now I'll wrap up. So to sum up everything, just keep in the mind, overconfidence skills, never trade using borrowed fund or others money, never trade as an investor, and never invest like a trader. Unless you are highly experienced, don't enter in future and option and intraday. And before opting for any course or anything from where you are learning, check the person is whether succeeded or not in the real world. And also, if you don't have time or if you don't have money, if you are busy in some other profession, simply invest in Nifty Biz. That will offer you much more than fixed deposit return. And after that, after the Nifty Biz, side by side, you can keep exploring things. You can keep learning from like you can engage to increase your knowledge. So that's it as of now. Now I'll go for this question and answer session, and obviously you can find me on YouTube channels, Twitter, and my website as well. In YouTube, I produce in all the three language video: English, Bengali, and Hindi. So you can check out that. So yeah, now I am opening this for the question and answer session.
Thank you so much, Prasenjit. It was actually very useful, insightful, and we really like the way you look at the market and how should one go about trading. I got a few questions.
Yeah.
The first question which you said, like the topic which you said, don't lose money, but few of our viewers are saying that how do you learn without losing money in the stock market? Because the real learning comes when you actually put
Mhm.
your hands, burn your hands, and that's when you say
Yeah.
mistakes I shouldn't do.
Yeah, that's a great question. There is two way of learning. First one is you learn by losing yourself, and the second one is to learn from others mistake. See, if you want to do all the mistakes by yourselves, you will lose a lot of money. You can spend your lifetime. So it is always better to learn from others mistake. I'm repeating you, if you want to learn, obviously you need to make mistakes, but if you want to make mistakes all of yours, then you will completely erode your capital in their lifetime. So it is always better to learn from others' mistake, and this is why I'm telling you multiple times. Look at this Vijay Kedia, Ramdev Agarwal. If you keep following their journey, who are really successful, not they are not just writing something just from others. So keep looking on the persons, keep looking the persons who are really successful in the stock market, and keep learning from that those persons.
Okay, that's actually very informative. There's another question you talked about index funds being able to easily beat the fixed deposit return. But there are a lot of active funds who are managed by the fund managers and other people who
Yeah.
have spent years of their life in just tracking or
Mhm.
managing the fund. Do you think
Mhm.
index funds are still going to be able to beat the returns that are generated by the active funds?
Yeah, why I have mentioned the index fund, because I mentioned, if you don't have any time to track the market, if you don't have time to learn anything, because if you want to invest in the active funds, obviously you can make much more return. As I'm talking, you can much more return from active funds or from the stock. But for everything, you need to spend your time. You need to gather knowledge. You need to track the market. You need to monitor the investment, everything. So this is why the alternate is, if you don't want any time, if you don't want to learn anything, then go for index fund. But otherwise, if you are ready to give time, if you are ready to learn, then yeah, explore. Much more return is possible, that I mentioned in the presentation.
Prasenjit, we lost your voice.
Hello.
Yeah, we got it back.
Okay. So I think I have answered. Like, if you can learn, if you can get ready, if you are ready to learn yourself, then obviously you can explore. But if you don't have any time to learn, or if you don't time to track the market, if you don't have, you are busy in some other profession, you have no time or no knowledge, then choose the index fund. Otherwise, if you have time, learn, explore, and earn much more than that.
Okay, so it depends on like what suits whose
Yes,
personality.
yes, exactly. What suits you, who you are.
One very simple question. Even I have this question. Like, you've
Mhm.
been investing and trading for a long time. What's your experience about losing money, and how do you think you should overcome it?
Yeah, whenever you lose money, obviously you lose money. Always keep things recorded, because whenever I enter in any trade, I keep a short rationally why I entered in a trade. Whenever I lose money, I also keep it writing, like, okay, this is the reason I lost money, or these are the things happened. So unless until you keep writing notes, unless and until keep it recorded, then you can't learn anything from losing money. There are two set of investors. One set of investors, they lose money but can't learn anything. Then there are another set of investors, they lose money but at the same time they learn something, so that they can't repeat the mistake. So if you are repeating your same mistake again and again, then there's something very wrong with you. You are doing something very wrong. You need to make sure whatever the mistake happens once, this shouldn't be repeated. And for that, you need to keep notes. You need to keep everything in your mind. Okay, so these are the reason. So be very careful. Losing money is not bad, but repeating the mistake is very bad. I mean, if you keep repeating your mistake, then you can never succeed in the stock market. So this is the most important thing. After losing any money, any amount from the stock market, do a self analysis. Stay very truthful to you. Nobody will say like, "Arey kya hai, paisa gawa diya." Nobody will going to mock you. So be very truth about yourself. Keep on writing, okay, these are the reason I lost, and make sure you are not repeating your mistake. And if you continue doing it for the 5-10 years, I'm sure you will be very successful in the stock market.
That's actually a very good tip, actually. So maybe learn from every mistake you do.
Yeah.
Yeah, there's a couple of questions more. The people are asking that what's your view on the current market, especially considering that the market is trading already at a high P
Mhm.
valuation. So do you
Mhm.
think the market is still investment worthy, or do you think that this is just a start? We could be going up more, or there's a correction around in the market?
Hmm. Hmm. That's again a very good question. Always remember that you don't stay away from investing, or don't invest looking at any kind of market level. There is nothing says the market is high, market is low. Whenever market is high, or if you feel the market is low, always remember not all stocks are at the high. There always remains an opportunity. Opportunities are always there. You just need to figure it out. You are not investing in the apart from index fund, you are not investing on the nifty, you are investing on particular companies. So apart from that, don't over keep analyzing whether the market is high, low, whether valuation is expensive or low. Keep searching on great companies. If you can invest in great companies, then you will make money, no matter whether the market is high, low, or whatever this is. And yes, if you are investing in index fund, like as I'm talking about this Nifty 50 ETF, this is simply correlated to the Nifty level. On that case, you need to make sure that you should continue the investment every month. A very big mistake maximum investors do, say for example, they invest in Nifty 50 ETF today. After a few months, they are losing their money, and then they stop investing. So this is a very big mistake. So if you are concerned about Nifty or the index fund, make sure to invest every month the equal amount for the next 4-5 years. Don't stop investing just because your investment is showing loss. Keep it continuing. But if you are investing in individual stocks, there are always opportunity. Don't think about this market level. Market can, yeah, obviously move up or down. Then after 2 months, obviously market can crash, but you need to make sure whatever the stocks you are investing, those stocks should correct much less than the overall market. So for example, if the market corrects by 20%, and if your portfolio stock is correcting 5%, then you are in a great position. Then you are one step ahead to become a successful investor. But if the market is correcting by 20% and your portfolio is stock is correcting by 40%, then there is something wrong with you. You need to look your strategy. So that's it. Don't think too much about whether the market is high or low. Just keep focusing on your investment process.
That's actually insightful. Maybe lose lesser than what the market loses.
Yeah,
So
exactly.
one final question, Prasenjit. What
Mhm.
is your view on other index funded funds like the Nifty Next 50 or the other index fund?
Mhm.
I mean,
Mhm.
do you think they still have a they should be performing better than the Nifty 50, or do you think they should be avoided?
Yeah, the chances are there. Obviously there are, I think today there are a lot of sectorial index fund as well. But as I'm talking, just to be on the safer side, if a particular investor is a beginner, just to be on the safer side, he can stay in the index Nifty 50 index fund. Apart from that, as I'm talking earlier also, like if you are actively exploring, if you are exploring lot of things, then obviously you can explore with lot of other index fund or active funds, any other ETFs and all. But yeah, always remember one thing: no matter what the market is doing, whether it is moving up or down, your target is to beat the market. If the market, even if say for example over the, say for example, last 6 months the market is generated, the Nifty is showing 20% return. Now go and check what your portfolio is doing, whether your portfolio is showing more than 20% or less than 20%. If your portfolio is showing 15% return, then again you are doing something wrong. Some correction needs to be there. I mean, some correction in strategy requires. But yes, if you are doing much better than the market, then you are fine. And these things becomes very critical when actually market drops. Even over the last 1 year, you will find in certain times the market corrected. Look what your stocks are behaving while the market is correcting. That tells a lot, because apart from fundamentals, apart from whatever you do analysis, price action tells a lot of a quality of a business. If I give you an example, many people might say ITC is a great stock, great fundamental, everything. But if the stock price is not moving, then there must be something wrong, which you don't know. Market participants, market can be never wrong. Always remember, market is supreme. If you are thinking, no, I know everything, I know ITC is a great stock, market can't realize it, then you are a fool. Ultimately you are not making money. So consider market as a supreme. Respect the market, respect the price. Over the long term, fundamental obviously converge with the price. It never happened over a 3 years period a particular company fundamental is improving and stock price is decreasing. It never happens. Fundamental obviously converge. If that is not happening, there must be something which you don't know, but overall market participants know. Okay, so that's it. Always respect the market. Take a clue from the stock price action, what your stock price is doing, and then obviously, self-inspect. That's the way to. And as I'm telling, whether market is moving up or down, always check your portfolio whether it is performing better than the market or not. If it is not doing better than the market, then you need to change your strategy. You need to modify something.
That's very insightful, Prasenjit. That is it from us in the question section. It was a very, very informative section, and we got to learn a lot about investing strategies and things to avoid and what should not be done. Again, thank you for coming on our platform of Elevate 21. We are very honored to have you. Thank you so much, Prasenjit, again.
Yeah, thanks a lot. Thanks a lot for hosting me.
Yeah, and last word of announcement for all our viewers. The quiz goes live in another 15 minutes. Please join the quiz. Today's topic is based on derivatives, that is futures and options. So you want to have fun learning and be there. I'll see you in 15 minutes. And if you haven't already enrolled, go to our Trade Brains main page. There's a link to enroll for the event, and you can also visit our portal page. And Trade Brains portal also has its own screener, watch list, and other important features. So do visit there and have a look. I thank you everyone for being a part of this webinar, and again, I'll see you in the quiz. Thank you so much. Thanks, Prasenjit.
Yeah, thanks a lot. Happy investing to all of you.
Thank you.